The stock market is still bullish, and today I'm going to talk about exactly why I believe so. And we're going to do the same format we did last night because there was a lot of positive feedback on the new format. So let's crack open these charts and see what's going on in the stock market today. All right, we're going to start out with a look at the E-mini S&P 500, and just let's go ahead and start out with the zoomed out view of the bear market resistance trend line. And then zooming in here, you can see that we now have the third day in a row closing back over this breakout. So this is definitely something you don't want to ignore. And with today's price action, we did backtest that breakout as support, which was right there at 39.80. And as you can tell, a lot of buyers of the dip stepped in and we closed all the way back up near this resistance trend line, which is right around 40.30. So there's still a very good chance the S&P 500 is trying to get up here to this resistance at 40.80. And then from there, we could see some type of inverse head and shoulders pattern as we digest some of this recent bull rally and get ready for that breakout above the resistance as we start running up towards 4,300. So if we just look at this chart 100% objectively and we look at the price action, we can see that we are very clearly making higher lows and higher highs, with the next higher high being that break above 40.83. So that breakout above 40.83 is going to be the next bullish catalyst. And in the short term, we are very likely going to at least attempt to break that level. And then we'll see if the bears are too strong at that level for the bulls to get the breakout. And in that case, then we would expect to see that right shoulder on this inverse head and shoulders. And then from there, the bulls will have a lot more momentum to make an attempt to crack above that resistance at a later date. So there is no way, looking at this chart, if you're being objective, that you should be overly bearish until we lose the support trend line. And that is all the way down here right around 39.60, and we're also trading above a rising 20 daily moving average. So use these risk levels and stay bullish as long as we're above them, because it's clearly working. And if you're buying the dip, you should be doing very well in this market, because every time the market gets any sizable pullback, it is instantly devoured by the dip buyers. And that makes for very easy trading if you continue to trade in the direction of the trend. Now, if short trading is working for you and you're making money doing it, then go ahead and keep shorting the market. There's nothing wrong with that. Just make sure you're managing your risk up here around the resistance at 4,000 and 40.83, because as you can tell, the bulls are trying to push through those levels. And if they do get the bull breakout, we are likely going to push to much higher prices. All right, let's jump over to the E-mini NASDAQ 100, which is the NQ chart. And again, we'll start out with the zoomed out view of the bear market resistance trend line. And then zooming in here, you can very clearly see we have 3 days breaking out above this level. And intraday, we did test the breakout as support. And we also tested the support trend line and instantly found buyers of the dip at support. So this is a very typical bull trend when you're seeing buyers stepping in at the breakout levels and the support levels. And that is exactly what we saw today in the NASDAQ 100. Now, this is an extremely bullish looking chart because we have this huge daily double bottom off of support. So if we do get the breakout above 12,040, we are very likely going to start melting higher all the way back up to the 50% retracement of the entire bear market, which means if we get the bull breakout, you cannot continue to short this market, or you are going to lose a lot of money shorting the entire bull rally higher. Now, whether or not you think that's possible is completely irrelevant, because you have to follow what the chart is saying. If you're trading the chart, you have to follow the chart. If the chart is heading higher and you're shorting, you're simply just going to lose a lot of money. So you just have to check your bias at the door and follow what the chart is telling you. If the chart is heading higher and you're shorting, you're going against the trend. And you're basically gambling on the fact that the market's just going to randomly crash and bail you out, which, yes, that has happened a lot last year, but last year is over with and we're in a brand new trading year. And last year's bear market behavior is not typical of a typical trading year. So be very objective this year and make sure you're understanding this is higher highs and higher lows, and we're getting very close to a very critical breakout level, although we have not yet broken above that level. So if you want to continue to short this market on the NQ, you need to use this risk level at 12,040. Once we break above that, it's going to be a lot more bullish, and we're very likely going to continue to run higher. But again, we haven't seen it yet, so you can continue to use it as your risk level if you want to short this market. Now, as bulls, just continue to watch your support trend line, and as long as we're above it, you need to continue to buy the dip. And then once we break below it, you need to cut it loose and then get ready for possibly something different happening, which means we could be heading to lower prices. But overall, this still looks like a very bullish double bottom, and also could turn into a bullish inverse head and shoulders from this neckline at 12,040. Next, we'll take a quick look at the VIX, and you can see the VIX got absolutely crushed today because it was trying to break out towards 21 and instantly found resistance at that negatively sloping 20 daily moving average and closed down below 20 yet again, So this is behavior we did not see a lot last year, with the VIX trading below 20 for many consecutive days and spending a lot of time below that level. Remember, the VIX is a measure of fear, so if the VIX continues to close below 20, that is more in line with the bull breakout that we're seeing in the price action, which means we're going to see lower volatility and that sort of melt up price action as we climb higher in a bull trend. So you need to be a lot more bullish while the VIX is below 20, and then if the VIX spikes above 20, then you can start getting a lot more cautious of more volatility. All right, next, just let's take a quick look at the US dollar and yields, and we can see the US dollar is still in this very strong downtrending channel ever since we broke the bull market support trend line. We backtested that level as resistance and have been trading below a negatively sloping 20 daily moving average ever since. With a weaker dollar, this is going to help those tech stocks continue to run higher, which is going to favor the NASDAQ 100. So a lot of these big tech companies could be in the very early stages of a bull trend as long as the dollar remains below this negatively sloping 20 daily moving average, and so far it has been doing just that. Now you could try to make predictions that it's about to bounce or it's going to bounce, but you need to see it in the price action, otherwise you are not being objective, and right now it's still in a very clear downtrend. On the US 2-year yields, we can see we're still getting rejected below a negatively sloping 20 daily moving average, with just 2 days ago testing that level as resistance and getting a very bearish rejection, which again, this is going to favor tech stocks as we see yields heading lower. If we jump over to the US 10-year yield, we see the same exact story, getting rejected from a negatively sloping 20 daily moving average, and the US 10-year yields are breaking out of that bull trend and heading down into a downtrending channel. So again, you can make assumptions and make guesses that these things might take a turn and go higher, but so far, if you're staying objective and following the chart, they are heading lower. All right, and then quickly, we'll take a look at Tesla stock because they did report earnings after the bell. And as you can tell from my Tesla chart, we are reaching that very critical support at the weekly support trend line down here right around 107. And that is where I was telling you we would likely find a bottom in Tesla stock. And when we got there, we had a lot of chop, but we also saw a lot of high volume buying. And ever since then, we've been off to the races, and today we closed up here right around 145. Now, there's one very important thing to understand in this stock is that it did reach capitulation, which means there's still the possibility it is going to very quickly recover that loss and head all the way back up towards 167 to 173. And again, it's very likely going to be just as quickly as it dropped. So there are a ton of short sellers in this stock, and they cannot stay short for long, especially if Tesla is heading higher, because when you're short selling a stock, you have infinite risk if you don't cover, which means you have to become a net buyer. So do keep in mind there is a possibility that Tesla goes higher for the simple fact that there's too many short sellers. So for that reason, I consider Tesla in short squeeze territory when it's above 145, and it's already been in short squeeze territory ever since it broke out above 123. The short sellers need to quickly break Tesla back down below 138, and then they will try to drive prices lower to fill these gaps at 133.5 and then down here just below 123. But again, that's going to be very difficult to do if the Tesla bulls are driving them out of the stock and forcing them to cover. So I am very bullish in Tesla as long as it's above 138, and then the next bull breakout will be that breakout above 145, and then we're looking for very quick trips higher. Because of the short squeeze higher, this is going to happen very quickly, and that's very likely going to send Tesla to 153 to 157, and then above that to 167 and then 173. So manage your risk right here at 138, and as long as we're above that level, you can stay bullish in Tesla for much higher prices. And then maybe just one last chart, we'll look at Bitcoin, which you can clearly see is still holding that bull breakout. So again, everything is looking bullish across the board, and that's why I'm remaining bullish. And if you have a problem with me being bullish, that's completely fine. You can leave a comment in the description on why you feel otherwise. But as you can tell from every chart I've went through, I've given you objective reasons why I'm bullish, and there is nothing emotional or nothing biased about it. So I have a trade alert service and the stocks channel Discord. If you're interested in joining any of that, you can find out more information by clicking on the links below. So thank you for watching. I hope you're crushing this market. And as always, I will see you in the next episode.